Hello, I'm Grace. We will conduct an in-depth analysis of the recent semiconductor stock crash that has shaken the domestic Korean market and the potential for an industrial turnaround hidden beneath the surface. The stock prices of Samsung Electronics and SK hynix, the two giants of the Korean semiconductor industry, have recently experienced record-breaking plunges, sending shockwaves through the market. According to reported figures, Samsung Electronics saw a staggering decline of 33%, while SK hynix dropped by 41%, driving investors into a state of panic. In particular, the psychological support levels have completely collapsed as individual investors, who entered the market at the 370,000 won level, saw their holdings slip down to the 240,000 won range. With Samsung Electronics and SK hynix fluctuating around the 550,000 won and 4.2 million won marks respectively, extreme volatility is exposing a peak in market uncertainty. However, a sober reassessment is required to determine whether this numerical crash truly signifies the downfall of the entire semiconductor industry. Experts are increasingly suggesting that the current downturn is fundamentally different from a peak-out phenomenon, where earnings hit their zenith and begin to decline. Fear has spread across the market without a clear distinction between a temporary correction driven by the economic cycle and a genuine weakening of the industry's fundamental strength. Wall Street financial experts are instead pointing to the fact that massive global investments in the field of artificial intelligence, AI, remain unabated. This AI-centric investment trend is shifting the fundamental structure of semiconductor demand to a dimension entirely different from the past. While semiconductor demand previously relied on PCs and mobile devices, a massive engine known as AI is now generating entirely new demand. Consequently, forecasts suggest that next year could see an unprecedented shortage, where semiconductor supply fails to keep pace with demand. In other words, the current stock plunge is likely not a sign of damaged industry fundamentals, but rather a temporary divergence occurring in the presence of powerful demand sources. Ultimately, what investors should focus on is not the immediate, volatile price action, but the structural industrial shift driven by artificial intelligence. Rather than succumbing to short-term panic, it is a time that requires a long-term perspective, considering the market environment of next year where supply shortages are anticipated. I'm Grace, thanks for watching.